Curious about surplus lines insurance? You're in the right place. Welcome to SLAI's informational video about surplus lines insurance. First, here are some key points to know about the surplus lines market. The surplus lines market is a safe, reputable, and important segment of the insurance industry. It plays a vital role, filling the need for coverage when risks are declined by licensed insurers. It is the safety valve that provides insurance for those who would otherwise be unable to obtain it. In this video, we will take you through definitions pertaining to the surplus lines insurance industry, why surplus lines insurance is necessary, an example of surplus lines insurance, and finally, the standards of the surplus lines insurance industry. Let's start with insurers. The insurer is the company that actually writes the policy and accepts the risk that something will happen. They collect your premiums and those of other insureds and invest them. If a claim is made, they pay the claim from this pool of collected premiums. Insurers must get a license in any state where they want to write policies. Each state has a Department of Insurance, or similar regulatory body, that regulates these insurers. These licensed insurers also contribute to a state fund called a guarantee fund that is used to pay claims if any of them were to go bankrupt. The regulation varies from state to state, but it can be divided into two general areas. First, they monitor the finances and market conduct of the insurers to see that they are financially sound and using fair and honest business practices. Second, regulators approve the insurer's policy forms, which make up the content of the policies, or the insurer's rates, which is the premium they charge for the policies, or both. Next, let's talk about producers. Producers can also be referred to as an agent or broker. If you're an individual, company, or other organization that needs insurance, the producer acts as the middleman between you and the insurer. Producers must also be licensed in any state where they want to do business. Producers must try to find you a policy from one of the insurers that is licensed to operate in your state. So, why surplus lines insurance? There are some cases where the licensed insurers will not accept a risk because it does not meet their internally established guidelines. The risk may be too big, too unusual, or have challenging risk characteristics. In these cases, a specially licensed producer called a surplus lines producer gets involved. Their special surplus lines license allows them to procure a policy for you from an insurer that is not licensed in your state. This is called a surplus lines insurance policy. In some states, it's called an excess line insurance policy. Since these insurers are not licensed in your state, they're not regulated by your state's Department of Insurance in the same way as licensed insurers. Most importantly, in the surplus lines market, the regulator generally does not approve the content of the policy or the rate charged. This gives these insurers the freedom to maintain broader internal guidelines for accepting risks. They have more flexibility to design and price their policies and can therefore accept risks that licensed insurers will not.
Hi there, I work at Acme Credit Card Company, and we need to insure our sensitive data against hackers.
Nice to meet you. I'm a producer. I will try to find a licensed insurer to write you a policy. Well, after checking with 3 licensed insurers, they will not write the policy because of the challenging risk characteristics. I will speak to a surplus lines insurer. They may be able to write a surplus lines policy.
Okay, thank you for your help.
Good news, an unlicensed insurer wrote a surplus lines insurance policy for your company.
Now, you may be wondering, are there standards for surplus lines insurers? Yes, there are state and federal standards for insurers that wish to write surplus lines policies. In many states, including Illinois, the licensed surplus lines producer is required to ascertain that the insurer meets the state and federal standards before buying a policy from them. In many other states, the Department of Insurance or some other authority monitors the financial condition of surplus lines insurers that are writing policies in their state. Whether done by the surplus lines producer, the State Department of Insurance, or some other entity, this financial monitoring is an important function because if the insurer were to fail, go bankrupt, there is no guarantee fund protection for you. It's important to note that insurers do not write on a surplus lines basis because they were somehow unable to obtain a license in your state. Rather, they choose to operate on an unlicensed surplus lines basis. Surplus lines insurers in the United States have a long history of financial solvency that is equal to or better than that of licensed insurers and provide an important, reputable safety valve for people, companies, and other organizations that would otherwise be unable to obtain insurance. To wrap up, please remember these key takeaways. Surplus lines producers must have a special license to operate and generally must report their policies to regulators. Surplus lines insurers have more flexibility to design and price their policies and can therefore accept risks that licensed insurers will not. Surplus lines producers and insurers are held to high standards, monitored by state regulators and/or other industry organizations. For more information, please visit slai.org.